Good morning. For those of you who weren't that optimistic about a deal being made this weekend, you were correct. For those of you that thought the market might violently sell off that news, well, you're correct. Those of you who stood in there and bought the dip again off this news, well, depends where you bought it. You are correct. We're well off the lows, but well off our close. So we got a battle going on today in the markets. We'll cover that macro news, whether we want to or not. Goldman Sachs in the red after its earnings report. Fastenal, nuts and bolts of the economy. We'll cover that. And the analysts were super busy doing their homework while watching the Masters. Folks, it's a Monday. We got a big earnings weeks ahead of us. We'll preview all that on PreMarket Pro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Let me add my charts to the stage. These charts are brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control with the platform built for serious traders and serious traders that want to integrate AI into their trading and investment strategies. Well, you heard it in the opening. We're down, but not out. Lower open. Found support, and now we're only down 49 handles. Will we end up? Well, you guys are going to help us figure that out. 68.07 is where we're trading. A little safety in the buck here, up 26 cents, 98.70. Trying to clear that 99. Looks like you got some resistance there. TLT not reacting well. That's down 49 cents, 86 even. US, well, you have a blockade, Strait of Hormuz. Starting at 10 a.m., folks. That's 1 hour and 57 minutes away. You have USO. That's up $9, 133.84. Not quite flight to quality here. Gold and silver, both in the red. GLD 480, 454, 432.49. SLV down almost 3%. That's down $2, 67.08. And Bitcoin, well, it's a risk asset. It's down today 3.28%, 71,075. But look at all that tame Bitcoin chart, 65 to 75K since February. Dennis, here we are again on a Monday, and no resolution here. I'll just give the quick Mideast updates. Everyone knows, everyone and their brother knows, U.S. military will implement a blockade of Iranian ports starting at 10 a.m. No one's too happy about this. No other countries are really joining in. China and India aren't too happy about it, but you throw a 50% tariff threat at China, and, it's okay. We're going to talk the stocks, oil up, cruise lines down, triple D. New day, new week, but
same story, no
same
deal.
Market.
Same story, no deal. It started Saturday morning, when we got news from Vance that he had obviously went over and they were talking, but no discussions, no deal to be had, coming home without a deal. And, obviously that, upset the futures markets. It upset Trump very badly. So Trump's, now talking about a blockade, trying to do things to get the strait reopened. Oil flying, oil futures absolutely flying. People were predicting, Black Monday here on Twitter all weekend before the futures opened, down just over 1%. The market has been speaking its voice, though, and even though a lot of retail, a lot of, people were nervous over the weekend here, I would say this is an impressive S&P to be down only 0.7%. on a day that we're looking at oil futures up, 7.5% here. Like, oil really hasn't given back any of those losses that it's had overnight, but the futures dip is getting bought. So, the story remains the same here, is that the S&P decoupled from the war about a week ago. And, we're not far from all-time highs, which is so impressive. How is it doing it? How can the S&P, this is what everybody's asking, be only 2.5% off its all-time high when oil is up 50, 60, 70%, depending on, what day you're looking at it, in the last month. Still, oil is a big driver of this economy. It has the potential to put us into a recession. It has the potential to make a lot of companies miss earnings. We've already seen Amazon coming out, and putting in a fuel surcharge. Obviously it's going to affect companies like FedEx, UPS, but it's not showing up in the stocks, at least not yet. So, at this point in time, like why I was tweeting last night, I was like, I think it's just another dip buying opportunity. And I was buying the dip last night, but I'm buying the dip on the stocks that have been resilient. You look this morning, really, how does oil impact hardware names, Joel? Like, how does it do it? It doesn't really impact hardware. And we've seen SanDisk on this ridiculous run. Here you come and you think, oh yeah, you'll get a dip now because the S&P futures are down 1%. You'll get a dip now because, oil's way up. No, SanDisk just goes another 14 points higher here this morning. Marvell, another hardware name, trading higher here again, up another $3, 128 to 131. The song remains the same. Like, are these stocks overbought? Absolutely. Does the S&P have any business being up here with oil where it is? No. But we can't, argue fundamentals. We got to argue what the tape is telling us here. And the tape is telling us that, for the bears, unfortunately for you bears, these stocks, a lot of them still want to go higher.
I was talking with a buddy of mine on Friday, very active in the markets, and like the same thing. I'm like, the market is up here with all this going on. It's like it's unbelievable. And he you know what he said to me? He said, "Yeah." He goes, "Yeah, but market doesn't care what I think. The market doesn't care. There's some silver lining that is being through all this chaos and everything, where everything's going to be all right. Everything is going to be resolved." Even though there's no indications going that way, and there's indications that things are getting worse and worse as we speak, but the market, it's just dynamic. And if you're going to fight it, then, good luck. Obviously the Friday, Sunday trade, the overnight risk, there's risk in the markets, but when you look at the reaction to this, if you're waking up and selling in the hole on these big dips, it hasn't
worked. Selling in the hole hasn't worked, and buy the dip has. Maybe we were in a market a month ago where selling in the hole was okay, but really it hasn't been, because it was an orderly sell-off. It wasn't really that violent. We had a couple days where it's like, oh man, this is really starting to get ugly. But the market's resilience is just unbelievable. And, if we get this oil spike and we get war and we get all this stuff and it can't take the market down, what's going to happen when we actually get some resolution here? We're going to be at all-time highs. Like, if we actually do get a deal, we actually do get resolution. Joel, just putting it in perspective here, the S&P rallied 200 handles on the potential of the deal being done. There's no deal now. It's all gone. We're in a worse shape on the straight than we were 2 weeks ago. Yet the S&Ps don't care. It's the sentiment has changed. The sentiment is like, I'm done hearing about the war. Even on this show, people don't want to talk about the war anymore. They want to talk about the stocks that are going higher. They want to make money. There's only fear out there right now in the stock market, is the fear of missing out. And that's why you're seeing, again, stocks are getting bought on the dip. So, you can be a bear and you could say, yeah, this is going to be really bad. But oil just rallied 60%. The S&P shrugged it off. So, that's pretty tough tape for the bears out there.
Well, we'll see what happens at 10 a.m.
Yeah, the blockade, like what's going to happen here. Iran did this, I saw this little cartoon, drawing or whatever that they did, basically showing that they're going to blow up the ships, the blockade. But we'll see what happens. It's going to be, this is something that's going to be ongoing for a long time. I'm believing now that this strait is not going to get open for a long time. And we're just going to have to settle for oil being higher for longer. Maybe the futures start to adjust because oil futures haven't been pricing that in. Maybe they start to figure it out. But right now, the S&Ps are saying we're okay with it. And I'm not going to argue with what's happening in the stocks, because we're seeing a bull market in a lot of tech names, not software. We've been warning you guys against software for over 2 months here now. But in a lot of other names, it's unbelievable, relentlessly higher. Even the stocks that weren't participating. We've been talking about the SanDisks and the Microns, and the Western Digis and the Seagates and the optical names, AAOI and Light for a while. All those stocks, Light, AAOI, making new highs as well. But, NVIDIA. Here's NVIDIA on the comeback trail. everybody hated at 165, saying, well, like, I don't know, could be over here. Now it's 185. So 188 on Friday close. The dip kind of getting bought here overnight again. AMD, not far from highs, not far from all-time highs. A nice 40-point rally last week. Love that. It's one of the biggest positions in my long-term portfolio. This is hardware. Intel has just been a monster. Like the monstrous moves of monstrous moves, going from 41, 1, 2, 3, 4, 5, 6, 7, 8 days ago to 62, and it doesn't go down. So the market's telling you which stocks it wants, and these hardware names continue to be the place where money's going to hide.
All right, I just want to put a bow on all this war talk and Strait of Hormuz. One thing that's was put out there, Trump threatened 50% tariffs on China if they send weapons to Iran, and that's a boom, just swept under the rug. Now, I'm just trying to look forward here. Trump and Xi are supposed to meet in May, right? And I think that maybe the market is looking like all this stuff is going to be on, and then going on until then, and then Trump and Xi meet, make up, and kiss, and the whole world's back to being normal again. But I tend to doubt that. We got a lot to cover.
I mean, there's going to be, if this war continues to go on and the strait continues to remain closed, there is obviously not just repercussions, for the Iran and Israel and this whole situation. I mean, the whole entire, Asian market here gets oil coming through there. So, I mean, they're going to want to get it open. China wants to get this open. They're going to have their voice in here pretty soon. Like if they're not already thinking about getting in there to say something or try to figure it out, they're going to start to try to figure it out, I would think. We did have some breaking news at 8 o'clock. Oh, you want to talk China quickly?
No. Let's go to what's that? RVMD.
Yeah, RVMD announced positive trials, pancreatic drug, their cancer drug, I believe. I was seeing the summary of it. Looks like 60%. Good numbers here. I don't have all the details on this. But of course, Fee in the background does. Reports top line results from pivotal phase 3 RAS. So I don't know. RAS salute. 302 clinical trial, all PFS and OS endpoints considered final. So hooray, RVMD moving up substantially here in the pre-market. It's up 33% here. The old XBI weekend trade, if you're hedging with SPY, is working once again here. Not only are you up 0.18% with your XBI longs, if you did the XBI long weekend trade, as we always talk about, you would be making, because we hedge it with SPY, you'd be up 0.65% on your hedge as well. So you're actually up about 0.8%. You can thank RVMD for this, but you can also thank we had a hit from Friday night. What was the stock Friday night?
IDYA.
IDYA. So both of these stocks, and again, I'm just going to type
Servier's top line data from phase 2-3 Optimum University of Michigan O2 trial met primary endpoint. If you know what that means, fine. But
I don't know what any of this stuff means, but all I can tell you is biotech. Again, how much is biotech impacted by higher oil prices? Not much. Not much. So this is a place where money has been going to hide as well. And if we look, I'm long XBI, my long-term portfolio, it's like 1 or 2% off from a 52-week high, and it's going to be moving up here again today. So RVMD is your big mover, though, obviously trading higher. XBI has 1.07% of RVMD. IBB should benefit from this as well. IBB is always very illiquid in the pre-market, but it's got 1.48%, so I think that would put upward pressure on the IBB here today too. It's flat right now, but I would think it would move higher on this.
I'm not going to break down the technicals because these things can, whatever. You can see the extremes that movement that these stocks have had. But, the thing that we like to point out when drug stocks, when biotech stocks have these kind of, this would traded over $45, the IDYA, and then the RVMD, that traded up to 146, I think, 147.33. Sometimes they're like, oh, wow, well, look at our stock price. We could use some money. And they, they come out with offerings.
That's one thing when you're chasing the biotech names that are obviously in trials. When you see the huge pop, sometimes a day or two later, they'll issue the shelf and then the offering comes and, the stocks pull back on those. Sometimes those dips are bought as well, though. It's just not a chasing environment. So as much as we can say, oh, the bulls are in control, at least for now, It still has not been a chasing market, although the hardware names you had to be chasing them until last week. It's starting to move into that, in certain stocks and pockets of it, but overall, it really hasn't been, a chasing market here. You wanted to take it back to the oil trade, and just break it down a little bit more here, Joel. I mean, we obviously had the RVMD. We want to get to that news as quickly as we could. Just taking it back to the oil trade, though, the stocks that are really suffering from higher oil prices are not technology stocks. It's the airlines. And Delta came out on their report, which I said that day when it was $75. I said in the pre-market, I said on pre-market prep, I believe, actually. And I said I would be selling it right now because we have oil, escalated pretty high here. And I think this is going to be a hard one to hold the gains. People are getting excited. Delta almost at an all-time high with oil where it is. Didn't make any sense at all. And it's come back down 9 points from when I was saying that just 3 days ago. Delta's down here again. The other airlines are starting to fall out of bed because these are the stocks that are actually impacted by higher oil. If oil stays up here, I don't care about your hedges. Eventually those come off. You can hedge for so far out. Some of these companies are hedging. They probably did a damn good job of it. But if oil stays up for the foreseeable future, like for longer, higher oil for longer, all these stocks start to suffer. So think about the airlines and the cruise lines. Those are the stocks that aren't going to do well at all if oil stays higher.
For those of you that take detailed notes on the show, like Jay Rice, maybe go back and listen to that show when Delta had the pop-off earnings. I mean, the thing was trading $74, $75. Okay, number one, just Delta has a history of like, oh, good news, good news. Oh no, wait, we said good news.
That's the CEO, yeah.
Yeah, like that's the CEO.
And I've said that before on CNBC, it was like 3 quarters ago. He's on there and saying, this has just been unbelievable. And then 2 weeks later, they lowered the guide. So he is one of those is very optimistic about his stock no matter what.
Second of all, we like to talk about expected moves in stocks. Delta was way over his expected move, right? So when you see those expected moves exceeded, sometimes you get just crazy days, right, where it just keeps going and going and going, or else it reverts to the mean on that one. So Triple D and I were on major agreement on that one. Looking forward to Delta here. It did have a good earnings report. Let's see, down today off oil. Let's see if it can stabilize. Let's just take a look at the other charts. We like Delta. I like Delta. Look at, that's USL. United Airlines, or we'll just go broad with our buddy Frank Holmes's Jets, Jets, Jets. Trading down again today.
There's always the potential to get a huge pop in these things, like we saw 3 trading days ago, that is, when we had the deal to open the straight. So, the gap risk is to the upside on all these airlines. So it's not that simple to just be short them because you never know what the Trumpster is going to say next. Just going into, you really don't know what the Trumpster is going to say next because he went on a full, attacking the Pope last night. This is like a whole nother level. And obviously we're not a political show and, we're not trying to tell you.
Or a religious show.
But it can't be good for his approval rating to be going on this, Truth Social and attacking the Pope, and then also depicting himself in a picture as Jesus. It's Christians were very much, supportive of Trump. He had a huge Christian vote here. So I don't know. I got to see if you're the Republican Party, you got to be like, I don't know, you should be coming and attacking the Pope. So unbelievable, though. But I'm just saying, you don't know what he's going to say next. So
I just want to throw something up here from Donna. She came over from Tasty Trade. She listened a long time, Tasty Trade listener, and she came over. Things I don't miss on weekends. Trader insulting each other over something connected to Trump. I just don't care either way. Donna just wants to make money in the markets.
And that's what we're trying to do for you,
That's what we're trying to do,
try
Donna.
to stay as neutral as we can here, even though obviously, we're not neutral, but we try to stay neutral as much as we possibly can. It's difficult sometimes, so, we're just
what I'm not neutral in? Sports. Michigan. I'm still
You're still flying from that. And Rory's still flying from, winning another.
Did I tell you?
Masters.
Can I give you a quick Final Four update? Did I tell you I was on the Jumbotron?
Do you have a picture of that?
I know, because I was like, you don't want to look up at yourself when you're on the Jumbotron. But Lisa was on twice. And, I did the M. like that, and I had my Industy We Trusty shirt on, and every day I go to the pool, people like the people that went to the game, I'd see Chuck at the pool. He's like, I saw you on the Jumbotron. I saw you on the Jumbotron. I saw you on the Jumbotron. That's what you get when you pay up for seats. But anyways, we digress. Not too much sports here.
That's what we do. We do
We
digress.
digress.
One more
Okay.
war trade that's moving here today, and then we're going to go to the Goldman Sachs earnings because we do our earnings season, folks. Earnings season officially begins today with Goldman Sachs reported this morning. Going to get to it in 1 second, but we got to talk this small little high flyer here that's flying off, oil. We don't talk these names very much, but this one's been going. Sky Quarry, SKYQ. And I didn't even hear about this company until you guys were mentioning it. And I guess this turns waste into oil?
Yeah.
What?
Yeah.
What? Really?
Yeah. Yeah.
Anyways, we often see these little high flyers get a story behind them and just start going parabolic. And that's what you're seeing here. Stock was $2.50 6 days ago. It's now $16. We know these things can rocket ship and just go, and have, parabolic moves. And sometimes they pull back, but, it's moving here again this morning, up another $4 here. SKYQ, just reading the highlights here. Nevada refinery gains strategic value as Brent crude surpassed 110. West Coast refining capacity shrinks. I mean, this is just, moving on the story here. Is this, an investable play here? I don't invest in any stocks go from $2 to $16, but you can trade anything. And you know what? Sometimes people like, us bringing up the real high movers, that are flying here and looking at these smaller names here. We're not a penny stock show, but there's no longer a penny stock. So, I guess we could talk about it.
They produce a grand total of 5,000 barrels a day. So,
well, that's as the barrels go up, I guess they're making more money. So,
yeah,
it's an interesting story, anyways.
Yeah, you could see the pre-market action here, the after-hours action, getting over $20. So, if you have targets in this area, then you have targets in this area. That's just, it's a high flyer. Just remember, there's people that are sitting at this stock. Well, at the beginning of April, it was a $2 stock. So just remember, if you're trying to scalp long, it's 1607. There are people that got this stock under 250 that are actually under $2. The stock bottomed at 185 on March 27th. So use your employ your risk reward ratios at your own discretion. Do we want to go? Is it time for earnings?
Yeah, picking the worst day to report possible. Goldman Sachs, obviously didn't pick it, it was already scheduled, but it just didn't work out for them. This is, actually Goldman Sachs always beats. It's assumed beat. That's the problem when you're as good as Goldman Sachs. You just assume to beat. They got to really blow it away for the stock to go higher. On a day that the S&Ps are getting hit here, obviously they're going to have to really blow it away to go higher. And it did run up, significantly in the last few days ahead of the report. You can thank, the fake deal, if you want to call it that, for, a lot of these pops in these stocks. But the S&Ps are still holding on strong. I tell you, man, Goldman Sachs, though, had a gap below here, Joel.
Yes, you are the king of technical analysis.
Yeah, it's trying to fill that gap, like right now. Like, fill the whole thing pre-market.
It is. You'll love to see that coming back down. And also, I was discussing with the buddy, we were talking about, gaps and everything. And I just kind of felt this move last week. Like, man, it's got to back and fill. Now, if you look at the S&Ps, there was no gap, right? Because the move that happened off the regular session. And I believe that was last Wednesday. But a lot of these stocks are coming down to fill the gap. So if you were trading this for that gap fill, keep an eye on this bar right here. There's a gap fill. They're not always super exact. 867.97. That's where it is right now. It's filling the gap. The low that day was 850 and the close was 864.15. So let's see how this digests the move. Can it bounce? It is. I mean, they did beat, but just like I said, not the greatest environment. It was tight up there over 900. Let's see if the bulls here can return in Goldman Sachs. And I would say just so far, the earnings season is still kind of early. A trend is a trend, right? Delta, good earnings. It was sold. It was up in the pre-market. Yeah. Goldman, good earnings. It was sold too. So we'll see
what happens, though. We are in the buy the dip market here. So I wouldn't write Goldman off here today. Like, if you're coming in and selling Goldman Sachs down 40 points on an okay report here, I'm not saying you're doing it backwards, but I'm saying I think you might get a better price here. So I don't know if I'm necessarily coming in. I don't know if this is the area I want to be buying the dip in financials. I'm just not in love with them. I don't own any banks right now because there is some uncertainty. We've talked private credit concerns. Not that Goldman Sachs is involved with that, but there is like some overall concerns here with the banking sector that I have. I think there's just easier trades out there right now. Like I was buying the dip last night in hardware names. I wasn't thinking of going and buying this dip in the banks. But I do think, like, if you're looking at down 40 on Goldman, I wouldn't be surprised if money managers coming and buy the dip.
Yeah, I don't know. I don't know what the expected move is, but like banks, like, how many chat rooms, how many Reddit rooms? Oh yeah, we got to follow Bank of America. And I mean, I know you like to trade those stocks because of the liquidity and, being able to get in out, and they're also super efficient for hedges. But let's move on to the nuts and bolts of the economy. Fastenal, in line, 30 cents EPS. Sales, pretty much a very, very small beat here, but trading down. Fastenal, the nuts and bolts of the economy. Once again, man, there's a lot of air in here. There's a gap to fill as well. Down $1.69. Let's see. You're not even at that gap area yet. The gap actually begins at 46.41. You did spike under that, but Fastenal, okay report. Not really getting rewarded on this.
This is a company that I've always loved, and I've never owned it in my long-term account. I've traded lots of times, but I've always wanted to buy this one in the long-term account. I don't know why I just never got there to do it. But obviously, this makes all your fasteners, like your screws, your bolts, everything that holds stuff down. It often moves with home builders because you use a lot of fasteners when you're building a home. So we've seen this in the past move, with the overall economy with home builders. This is not the case for Fastenal as of late. It has kind of decoupled here because if we look, and you go out, we've had a pretty ugly run here for Toll Brothers, for KB Homes, for Lennar. Obviously, this was interest rates, when we expected interest rates to potentially go lower, earlier in the year before the war started. These stocks were doing pretty well. They've fallen out of bed since the war has started, but Fastenal, unbelievable resilience has not. And it looks like it wants to go higher here. So from a technical basis, Fastenal still looks great. Also, we'll get to ratings here a little bit later, but a lot of those home builders were upgraded today. That's an interesting call, which we'll talk about, after our guest at 8:50. Do we have a guest today? We had one, and then we
nope. Tim Quast, he can't.
Tim Quast had to miss.
Yeah. So how about I just put the StreamYard link in the chat, then we just let everyone in the chat join us on here.
Well, that would be good. Yeah, everybody can just.
Do you remember? On. This is an old one. Do you remember when you posted the Zoom link on Twitter?
Yeah, I know. I was trying to post where the show was. And I posted the Zoom link to get into the actual studio. Everybody's like, "Oh, these people are coming to my studio, Denny. What's going on?" And I was like, "I don't know." And then he figured it out. It's "Oh, I posted the wrong. I was supposed to post the tweet where you can see the show, but I posted the studio link to get into the studio."
And I was going, "Bam,
bam." That's something I would do.
And then the top things off. I left my mic on afterwards.
We were really flustered.
I was swearing at you. I was like,
you were cussing at me.
Yeah, Ken. Yeah. I think next time we get I was trying to get Aaron Thomas there. I can't remember who bailed me out of it, but I know Kenny remembers that. Let's stick on the earnings preview. Yep, go.
Yeah, Michael Feehan doing a fantastic job with our earnings calendars as always. He's got it ready to rock and roll here. So we are in earnings season. We got the 2 today. There's nothing tonight. I can look if BK cares. But Goldman Sachs, Fastenal. But tomorrow, you can just look through here. JP Morgan, BlackRock, Citigroup, Johnson & Johnson, Wells Fargo. Wednesdays, Bank America. The big one, ASML. That one will be interesting. Morgan Stanley. PGR, PNC, MTB. Thursday comes with Taiwan Semiconductor, but they already kind of guided. Yeah. So we already know the Taiwan Semiconductor earnings are going to be good. They've already guided up a little bit. That's why we had a gap up there. I believe it was Friday, actually.
It was Friday.
We kind of filled it back a little bit, though. Snapchat, if people who still like Snapchat, I think Dan Nathan's been on that one forever. That one reports, I believe, on Thursday as well. Netflix, that one's interesting. So maybe preview. Let's go jump to the Netflix technicals, because here is a stock that I've been arguing for a while is now trading, dropping my pen, is now trading with the staples. It is now trading defensively. And if we see here this morning, the exact same thing happening here again. Netflix is trading green. So for whatever reason, they've decided that Netflix is more of a staple here now and does not trade with tech stocks anymore. And it trades more defensively, has defensive postures to it. So if you got, your Netflix and your tech group, take it out of there right now because it has not traded with tech for a while here. It's trading very defensively. And the best thing they did, like we've said before, is say no thank you to WBD.
Yes.
And that was their best move with the no thank you to WBD.
I've kind of liked this thing for a while. The gap the gap kind of messed me up. I should have. I remember talking about this one with CC. Back in February and March when it was in this area, and I remember them. Talking about the options are not really pricing it to go back over 100 until like early May or June. And that was the expectations. It had the gap up. I mean. It gets absolutely annihilated over this deal. And look what they did to this. I don't know when all this started, but look how they walked
They
this
just
thing
kept
down.
whacking it every day. And management, I think, finally looked at the stock chart and said, maybe we should walk. So smart. And then that was the rebound and that was the comeback story for Netflix because like WBD, the premium paid there was absolutely just ridiculous. And PSKY, it's bounced off the lows, but they gapped it up on the news that they were getting it and then they sold it off 40% after that. So it just didn't make sense at all in this environment, in this AI disruption world, to be going and paying a huge premium for Warner Brothers Discovery. I mean, it just didn't make any sense. So Netflix, shareholders have rewarded the company with a 30% rally since they walked away that deal. And a lot of that is well deserved. Good job, Netflix, for walking away.
And I would not be a fader. I just look at this thing in just my contrarian ways. I mean, let's just do this is on the weekly here, just to give you some expectation. I mean, it's creeping up. It's certainly not. I mean, just to get half of this. Wow, it's almost got half of this move back. Look at that.
I know.
105.
It's back. It's back. I don't know if I can come here and buy it here now, but if Netflix was to disappoint on an earnings or something and give you a dip, that might be something interesting. The valuations, I bought this thing. You remember when I bought it?
Yeah, I remember.
But I mean, I traded down to 15 times earnings. And this was back like when Bill Ackman said he bought it and then sold it. Like I got a bail. The Ackman just screwed that one right up. But I bought it down there near the lows. I don't.
It was a double down.
It was like 180 or something, and then it split. I don't know if it splits 8 for 1 or something like that, but it was near the lows. And I think it was like, I'd have to go back on the chart. It's like 5 years ago when Ackman was selling. I was like, it was 2022 when the stock got down to $20. And I remember CNBC putting it on the screen. They're like, Netflix is now trading, and they had the big screen on this, 15 times earnings. And like, is this story over? And I was like, this has gotten cheap enough here that I'm like, this is a good enough company that I got it. Like, come in here. I had a little piece of it earlier and then I like tripled down or quadrupled.
Yeah, that's what I remember.
I had it earlier and I bought it with Bill Ackman. And instead of Bill Ackman sold, I was like, you know what? I'm not selling. I'm going to quadruple down on this thing.
Can't sell.
It came back and I sell too soon, and it's running, went up like, 800% or something since those lows. I obviously sell way too soon, but it was a great trade. I mean, now we're looking at Netflix from a valuation perspective, and you can just do this. You've got to do this every once in a while, especially in a market that cares about valuation again, and it has. We've been a value-oriented market for 6 months here now. Really the stocks that are really driving us are the industrials. Stocks that have been trading, under. Can you hear me still?
Yeah. You just were a little bit, but you're fine. You're fine.
Okay. Anyways, I was trying to bring up the Netflix PE here now, but obviously my computer's going to bugger up when I'm trying to do that. So I'll just lay off. But I think last time I looked, it was still 30 times earnings. The stock's still not cheap. Tell me when it comes back to 20 times earnings and I'll load up.
And that aren't they trying to get into more sports? Aren't they?
Well, I think that was the WBD a little bit too. You're trying to get in there and they're trying to find different ways, but they'll find ways. I mean, don't count Netflix out. Obviously they are doing a little bit of sports here, but I think they're going to find other ways here too. Like Warner Brothers Discovery assets, like we went through this, and it's a good, thing to go through every once in a while. But when we're looking at, which stocks that they own or which companies, I should have been more prepared for this here. Global Networks. They got Discovery, obviously, TLC, TNT. That would be their big sports network is TNT. So, but is it ESPN? No. You want to go pay a huge premium to try to get TNT? I think there's better ways for Netflix to do it. I think Netflix will figure it out.
Okay, so Netflix is later in the week. You got all the banks on Tuesday. Real quick, J.P. Morgan, Wells Fargo, Citigroup. But you know what we haven't talked about in a while? Johnson
What?
and Johnson. Johnson and Johnson is
It's
due
been
to
so
report.
resilient. We don't worry about talcum powder and asbestos anymore. This has just been resilient. Again, even the defensive nature, has held it up here too. But the valuation is not cheap on J&J either. Like, I mean, I haven't liked it for a while because of talc issues, but obviously nobody cares about the talc issues anymore. They're settling these things out all, doing it on their own. There's like thousands of cases against them for this, obviously asbestos and the talc. And that's what kept the stock, to depressed valuations for a while. They don't care. The market doesn't care about it anymore. Even if you hear, there's settlements, different stuff, the market's just done with it. Doesn't care about it. And it's a company, it's a staple, it's resilient. It's been there for a long time. I mean, the Johnson and Johnsons and your Procter and Gamble's have held up. Well, P&G has actually quietly sold off. You start seeing what's happened in some of the staples, and obviously certain staples, have been really good. We know Walmart is in the staples as well. The XLP, Coke, Pepsi have held up fairly well. Food stocks have not. The Conagras of the world and the GISs have all been murdered. But Procter & Gamble and KMB just quietly starting to sell off here too. I don't know. I don't like Johnson & Johnson here. I think it's just come too far. If I had to make a call on J&J here at this point in time, it's still best of breed, but I got to think there's easier money out there. I'd probably ring the register in J&J. It's been a pretty impressive run for the last 6 months.
It's had a long I mean, with all the ups and downs in the market since hit its all-time high in March, and just hanging in there. We'll see out the reports. Not sure what the expected move is, but if you do get a pop up to 240, you got a 247 seller. That's $10 below. And then I would say if you're just hanging at the 50, and I think these are like, when they just hang at the 50 like this and they can't establish a sustained bid above it,
Yeah.
I kind of look for a little bit of a leak here in Johnson and Johnson, but
And they report Tuesday morning. So tomorrow morning, we're going to find out here. But I think the bar is kind of high here. So, and there is a lot of air below. It's had a hell of a run here. I think, I'd be a little bit nervous taking this one through the report.
And maybe getting a little bit more look at the consumer. How's CarMax doing? I can't imagine that stock. Long
CarMax going off the grid here. I haven't looked at CarMax in a long time.
No, I just had it down as an earning. Well, great support at 40, but it's at 46. That's been in a
ASML. Do a technical on ASML. Yeah, reports Wednesday. This is obviously, been coming on the comeback trail. Hardware. We've been talking about hardware. It's getting a dip here this morning. It's nice that it's getting a dip here this morning. Is this another chance to get into a hardware name on a dip ahead of the earnings? I think so. Thoughts here on the technicals on ASML?
It's a gapper because right trades
ADR. So
it's traded down. It's hard. It's when they gap around like this, it's hard for me. I would just say you're good to go as long as you hold this 50-day at 1392.60, 200-day, way down here. If you're looking for the all-time high off the report, that's 100. That's wow, at 1547.22. And your closing high was right there at 1526.51. They need to split this stock. I mean, it just make it. How's the liquidity? Trades.
Oh, it trades pretty good. I know. I hate trading the $1,400 stocks. I do trade it, but I hate trading the $1,400 stocks because it's it is a liquidity thing. And I know people say, well, percentage basis, the spreads are still pretty tight, but I look at it and just think, oh, I got to see a 50-cent a dollar spread on it. And I think I'm paying $100 if you're doing 100 shares. So I I can't stop thinking about it in that way.
The
pre a lot of other banks that report here, Joel. Like,
yeah.
I mean, we went over Goldman. What does this mean for the other banks that are going to report tomorrow? Did Goldman just set the bar lower, because the stock's pulling in on it? Like JP Morgan reports tomorrow, Wells Fargo reports tomorrow, Citigroup reports tomorrow. We should talk Citi because it's been on a tear.
It's been a beast.
And yeah. And I would say it's an all-time high, but you go back to that 2007 financial crisis, and no, they reverse split this thing 10-for-1. So Citigroup will never, ever maybe see those all-time highs here again. But it's a multi-year high, so we can go back. This is the highest this has been in like 8 years. And where the other banks, some of them are off the high, Citigroup is not. Citigroup is sitting here consolidating up near the highs. Looks to me like it wants to break out, but yeah, a lot of people who don't go, have started trading since 2010, the last 16 years, think Citigroup's at an all-time high. Oh no, it's not. When you get a financial crisis, it's fun, and dilution is fun as well. And when you're basically teetering on bankruptcy, which Citigroup was, and you have to dilute yourself to death, there's the Citigroup chart from
Well, why is this? Why is
never
this
came back.
Why is this so perky? What?
I don't know right now. Like, is it just, like we've always thought of JP Morgan as best of breed. It's always traded with a higher, book value, and it's traded with, a higher multiple here. Citigroup playing a catch-up trade? Is that what's happened? Because I tell you what, the Citigroup chart looks good. Like, it looks bullish to me. Yeah, and I think I would be buying dips on this. If I was just a technical analyst and wasn't worried about wars or anything like that, I'm not worried about the war anymore, as I've been tweeting out all night. I think this is a stock you actually do look at buying on dips.
I mean, you're coming up on, you had 3 monthly highs at 125. Where are we at? 122.09. The high was 125. Man, if this establishes a strong bid over 125, and it looks like a breakout. And as you can see, going back on the monthlies, in another year, we're going to lose that all-time high of 562.80, going back to the financial crisis. Dennis, one general question here on the earnings. I know one of your strategies is to play stocks 2, 3, 4 days ahead of their, or sometimes even longer. Not really the market environment, right? We just had too much going on with the war. And as you can see, for the pre-earnings runs, I mean, is there times where you back off this strategy? It'd probably be now.
But I haven't been. So I was backing off the strategy 3 weeks ago. But when the bulls take back control, I start to think about, pre-earnings run trades here. So it has, been working again and again. Certain stocks are made for bull markets. Certain stocks are made for bear markets. The definition of a bear market is down 20%. I squash that definition. We were in a bear market in a lot of stocks for the last month. We've been coming out of it here, though. Like, we're remerging from it here. We're emerging into a market where the bulls are more in control. And I guess it depends your time frame. 7-8% pullbacks you don't care about on S&P if you're, a long-term investor like Warren Buffett. If you're a trader like Dennis Dick, you need to be, more, timing the trade. If you're waiting till the media tells you it's a bear market, you've waited too long to sell your stocks. If you're waiting till the media tells you it's a new bull market, you're waiting too long to buy your stocks. So as a trader, your time frames have to be a lot different than Warren Buffett's. So, the bulls are back in control. So maybe it's better not to say bull market, bear market, but controlled by the bears or controlled by the bulls. Right now, this market is back to being controlled by the bulls. Maybe not in the oil, maybe not in the airlines, but in a lot of stocks going higher. I mean, the S&Ps now, Joel, we could just bring that back. We've been drifting higher here the entire pre-market session. We were down about 1.3% at its worst last night. We've got over half the losses back from last night here again. We gap down, obviously, and then we start, just climb, the steady climb. The S&P is climbing back here once again. You won't see it on the SPY chart as much because they didn't open until 4 a.m. officially. Even though they're open at 8 p.m. on Robinhood, they didn't open until 4 a.m. officially here. But there you go. Like, we've already bought the dip here. So when I was tweeting last night, I took so much heat, man. This is what makes me feel more confident. When I put something out on Twitter, it's almost like a sentiment feel for me. I want to see the pushback. And when I say buy the dip and short oil stocks, oh my gosh, like the hate to me, like, you're crazy, man. You're crazy to be shorting oil stocks. I think oil's going to $150 a barrel. You're crazy to be buying the dip here. The stocks we're gonna have Black Monday, Denny, and you're gonna get murdered. Well, you know what happened? The same thing. The trend is your friend, folks. And the trend in the last week and a half has been to buy the dip. I'm not going to move away from the trend. It's telling me, it's the technicals are telling me. Yeah, fundamentally, it doesn't make much sense that the S&Ps can just shrug off a huge move in oil like this. But we can't argue, fundamentals are on the back seat right now. We're being driven by the dip institutional money that is underinvested and scared. It's tech driving it. We've seen hardware names, but it's also industrials driving it. It's also the value trade driving it. There's a lot of other stocks going up too. It's not just tech. So, I mean, again, what happens? Money managers start getting to their desk and they're like, crap, this is a dip for me to buy. I'm underinvested. I'm going to utilize this, opportunity to buy. And they do. So, I mean, it's really, retail. I've been saying this for a long time, is your overnight after hours pre-market. Once you get to the intraday and even early pre-market, like late pre-market when we're getting here, institutional money managers getting their desk, starting to come in here too. Think about if you're a money manager and you've been like bearish, and you're seeing this S&P just rally in the face of this oil, and you're like, crap, man. I'm like, it's okay if you're losing money with everybody else, you won't lose your job. But if everybody else is making money without you, then you lose your job. So there are money managers that are scared right now to be sitting in too much cash. There are money managers right now that are consistently buying the dip. It's those money managers that are coming in here every day. And you're like, how did the S&P come back again? It doesn't make any sense. Well, it does when you start thinking about the cash that's on the sidelines. And if the cash is on the sidelines, and we're thinking there's going to be a resolution here eventually, even though if it's not coming, every war dip in the last 8 to 10 days has been a buy dip opportunity.
Yeah, we're inching our way back up. For the S&Ps, the bottom of the range for Friday was 46 and a quarter. So we only have another 26 handles to go. But I think if your stocks are trading in the red, look at where they're in relation to Friday's range. See if you can get back up there. Of course, seeing unchanged would be the next objective. One thing we like to do on the Stock Trader Network to get a feel for the overall market, what's buying and what's selling, is taking a look at our heat map here. And as you can see, a lot of red here, right? This first column has your banks and your financials. Goldman Sachs leading the charge here. Your tech is weak too, except for that little uptick in Netflix, which makes sense, right? Maybe I'll move Netflix over here to the Staples corner, Dennis. And then this big line of green here. Yeah,
that's all your oil
get
stocks.
ExxonMobil, Chevron, ConocoPhillips, Halliburton, Schlumberger, Fang. So they're your oil stocks. And another thing too, the levels that Dennis is talking about on these oil stocks, and some of these stocks that he's bought and sold, they're not necessarily levels that you're seeing on your screen right now. So if you say, well, Exxon oil is up $3, how the heck can you make money shorting it or selling it? Well,
it was up $6 last night.
It's $6.
It was just an overshoot last night. ExxonMobil, the XLE, the XOP, all were trading up 4 to 5% last night at Robinhood IBKRs. Even in the pre-market here at 4 a.m., they were trading higher here. So, we've seen the story before. We can say, oh, yeah, oil's going to $150 a barrel, but it's not going straight there. And when you get a gap, we're up 8%, they're all up. You think we're going up another 8% tomorrow morning? Is that what you think's happening here? Oil goes up 8%, and now you're buying. It's why I tweeted out last night. I tweeted out this specifically. If you're buying oil up, 8%, oil stocks up 5, 6, 7% on Robinhood last night, you're doing it backwards. Like, do you really think we're going to gap up 8%, and then in the morning we're going to gap up another 8%? No, we just priced in this news here, and this has been the fade trade, and this overhead supply here in oil stocks now too. Like, bring up some of these oil stocks names. Let's talk them, because I was like yelling at Greg Abel, sell your Oxy at 65 because I think this thing is topped out. Well, I gave you another chance, Greg, last night. This was trading over $61 last night. No, as you can see, even on the pre-market, it was trading at $61. Now it leaks it back. We just start leaking it back here again. And because, these stocks, I believe, have all topped out. I believe the oil stocks, maybe we're going to get maybe this is going to escalate to a point where, there's no oil ever going through again, and maybe that changes circumstances. But if you're buying stocks up 8%, thinking they're going to gap another 8%, that is totally backwards, man. You're trading just wrong. It's been a contrarian market all year. We're not in 2021 where stocks go up 8%, go up 16%. We're not in that market anymore. We haven't been in that market in a long time. So contrarians winning. These are simply contrarian calls, and they're day trading calls, they're short-term trading calls. I have no idea where oil's going a week from now, but I can tell you when it gaps up 8% overnight, there's a higher probability that it's going to start to pull back. Especially on the oil stocks. Like, I wasn't trading so much USO. I don't care so much about USO, but the oil stocks themselves have not even been, following USO as much as they have been before either. So they follow it loosely. But when ExxonMobil's up 5, 6%, Chevron's up 5, 6% after hours, on oil being up 8%, it's probably more of a fade than it is a chase.
And also, you just have to look at the market structure, right? These stocks have just even though oil's still at elevated levels, look how much Chevron has come in from that all-time high. So what that means, it's created overhead supply.
For sure. There are people here who believe this was going to 150 that chased oil. The chasers, again, losing. This is what you are realizing. Not even on all time frames. Here's something for you. On all time frames, the chasers are losing. So you can go out to the daily chart and say, man, yeah, oil's, Chevron's went 150, 160, 170, 180, 190, 200. I'm buying it here at 210 because it's going to 220, 230, 240. Oh, no, you just bought the top. So on that time frame, which is a 4-month time frame, it's not working. It's your swing trading, whatever, investing longer term time frame. On your day trading time frame, it doesn't work either, because last night Chevron's trading up 5%. You're like, now you're coming in and buying? I'm like, I'm selling it. I would be selling it in, selling short, like looking at those opportunities there as well, because there's just not the market that we're in. This isn't the market we've been in for a long time. It's a contrarian market. And if you're still trading momentum strategies in a contrarian market, you're doing it wrong.
Real quick before we get to our ratings, just going back, I can't Palantir on Friday. Well, not even Friday, but the last 3 days of the week, Palantir trading up 335, got a little rescue tweet, and that took it off the low of the day.
That helped.
It helped, but boy, oh boy, what a horrible 3-day stretch here for Palantir.
Well, actually, I would say Friday was good, because Palantir would have been
good.
uglier. Trump bailed out Palantir. The tweet where he actually put the ticker symbol in the truth.
He didn't put the dollar sign, though. He didn't put the dollar.
You're telling me like he forgot the dollar sign. You're telling me like you want the stock to go higher when he's putting the ticker symbol in there too? That's craziness. But I mean, that turned the stock around, because software was not having a good Friday again. And overall, it didn't. This has been coupled with the software names. But all of a sudden, he's ignited the fire that Palantir is a defense stock again, because the market had now said Palantir is not a defense stock. It's a software stock. We don't care about the war, and we don't care about Palantir as a war stock. Trump just put Palantir back in the war stock category, and we can see we get war, we get escalation here. Palantir is actually trading up 2.6% here all of a sudden now. So now Palantir is now trading, and also trading as a Trump stock. And you never want to fight the Trump stock. So as much as I didn't like Palantir 2 days ago, I'm going to say, I don't say I like it here, but I would not want to be short of here now. I think Trump actually just changed the entire narrative there. So do you want to, we saw with Intel, Intel became a Trump stock, and then it goes up for months and months and months. So it's hard to fight that narrative. So, people are going to say, oh, Denny, but you said 2 days ago that Palantir could go down to $50. Yeah, I did. But I didn't know Trump was going to come out and actually put it on his truth with a ticker symbol. I'm like, okay, well, now you got to bail out. Does it get forgotten? Do I think Palantir could go lower long term? I do. But short run here right now, you're fighting the Trumpster. Hard to fight the Trumpster. What's known what he says next? So it's okay to be wrong. It's not okay to stay wrong. That is trading. Write that down. I say it all the time. It's okay to be wrong. It's not okay to stay wrong. Obviously, when I had worst timing ever, I think it was Thursday or whatever, I was like, Palantir is just not liked at all, and I don't like it at all either. I think it was actually higher than that, because it sold off. It was like last week. But regardless, I mean, when Trump tweets about your stock and you're short the thing, you got to be covering, man. You got to be like, oh, I'm not going to fight Trump. We've seen what he's done to stocks before. So it doesn't mean that the entire stock is like a buy here right now for your long-term account. Valuation still nosebleed. There's a lot of concerns here, but hard to be short when Trump's putting in the ticker symbol. That's the first time he's ever done that. I've never seen him
I don't know if I've seen
actually put a ticker symbol in a truth. That's crazy.
Before we go to ratings, I just want to say, being a defense stock, is that such a good thing? Look what these defense stocks
they haven't been good.
No.
They all look like they're ready to roll over here again.
Yeah.
So interesting that we're in war times here. The defense stocks just cannot catch a bid here. And they've run a long ways. And that was overshoots too. Remember when the first day announced the war and Lockheed Martin was trading up 100 points. It was up 100 points after hours on Robinhood. On the first day that they dropped the first missile, on Iran. It was up 100 points on it, from 650 to 750. I was like, a jaw dropper. I'm like, really? It never even came close to that in the regular session. That was the 692 day. The 692 high. It's at 749 on Robinhood that night. They're crazy over there on the Robinhood sometimes. They go nuts. They chase. They're all chasers. Now, there's some great traders there too. Some great traders as well. But the majority of traders on Robinhood are chasers. You don't want to be chasing. Chasing last night again. They're buying Chevron up. Chasing.
Don't be chasing on a Sunday night.
Stop chasing.
Stop chasing. Okay, so while they were watching the Masters, our analysts, we're pretty busy here. So why don't we take a look at some analyst ratings? This is a big one, I think.
This has been just an ugly, ugly, ugly story for a while. The dividend here is now 6.43%. I mean, you think about Best Buy, but they sell so many different things. They sell, it's obviously all electronics and that. And stuff like this, we've talked about this for years. People are just buying this on Amazon. They're buying this elsewhere. They don't have to go into a physical store, and they're huge stores, to go and do that. And when you walk into a Best Buy, you do boots on the ground. I did boots on the ground, build a bear. I tweeted out this weekend, and build a bear. There's some people in there. The kids are building bear. It's a whole experience there. But I tell you, with Best Buy, is you go in those stores, they're never busy. These are never busy. These stores, like there's always like a few people in the store, but you look around, and you think this is a huge store. It's half the size of a Walmart. Some of these stores, and there's like 10 cars in the parking lot. I'm like, how the hell are they like making money? They found a way. It's been a cash cow for a long time. Well, Goldman Sachs is off the bandwagon. They're taking it from neutral to sell today. I don't know why they do this though. Let's say they go from neutral to sell. The stock closes 62.37. They put a $59 price target on it. So you're telling me to sell it because you think the stock's going down 3%, 4%? Really? Really? Like, can't you put like a $30 price target or something on? At least, Gordon Johnson, if he's on, he puts like price targets like, I want you to sell Tesla. I think it's going to 24 bucks. I mean, sorry, Kate McShane from Goldman Sachs, but when you're downgrading a stock to sell and your sell price target is 4% lower than where the stock is currently trading, what's the point here? So I can say it's ugly, and they've already knocked it down. Are you covering now? Is Kate a day trader here and going to cover the position at 50? Not that they don't trade the ratings, but I'm saying, if you're making calls, you're saying, I think it's going to 59. Now are you going to go upgrade it tomorrow or back to neutral because it got to your price target one day after? I mean, put a price target on it. So analyst, Kate, please listen to me. You're going to do a sell rating. Cool. Make a bold call. I like the bold call. But you got to put like a price target that's lower than 4% when you put a sell rating on it. It's there right now. It went to your sell price. So, you caused this to go down 4%, and those are your price targets. So put like 50 or 45, or have some guts. So, Kate, sorry, no guts. I give you an F for having no guts.
Yeah, I could go with my L on here. I'll just alert our traders and investors. This is coming at the low of the move, 59.88 and 59.90. That was a double bottom. So see if they can get it back above that. Just don't know about the consumer. I know that they closed the place. I know they closed the store around here.
Did they?
Yeah, they did. The
Oh,
one on
wow.
they closed the one on Orchard Lake.
Stores.
Yeah. The next monthly low comes in at 59.16. So I mean,
I don't like the stock.
yeah,
I'm going to say I don't like the stock. So I think Kate's got the call to sell, and I was like, bravo. And then I looked at the price target, and I'm like, no. I'm like, you screwed it all up by not putting like a $30 price target. Have some conviction in your calls. So that's why I don't like the rating. It's just the price target that they've given them.
All right, how about this? How about this one? How about this? Constellation Brands up at TD Cowen to buy from hold on strong beer business outlook and easing overly conservative guidance. So it's 150. I don't hear from you. It's 165, and I hear from you, Dennis. What do you think?
Chasing. And we just got done telling everybody on pre-market prep this is not the market to chase, and yet this analyst is absolutely chasing Constellation Brands. It's ran 10% in 2 days. Now I buy it. Wait for a dip. If you want to put this note out, I would say wait till you get back down to 160. It may continue to go higher. Maybe this analyst rating, and they do influence, could continue to go up here, but you're chasing it here again. So we'll give it a C for chase.
What about Sam Adams, man? Boston Beer. That thing just a little
coming
bit
back.
Coming back.
It's been crushed. And I mean, these, beer makers, obviously, all the microbreweries, everybody's like, ooh, check out this news, a new microbrewery opening up over here, new there. Go check out the beers. This has killed them. The microbreweries have killed them. Everybody likes trying something different. Tap, obviously is the best ticker symbol. Love the ticker symbol. Same type of thing. I think the microbreweries have just depressed these stocks. Here, the dividends decent, 4.35%. They make beer. It's a staple for sure. But I'm like, there's so many other places to buy beer here now. So many like cool places, and these microbreweries are not going away. They just keep popping up all over the place. So it's called disruption from everywhere. And that's what's really happened here with TAP.
All right. Any other ratings catching your attention?
Well, there was a lot of them here today. We do. So the biggest analyst days for ratings are Mondays and Tuesdays because the analysts want to get out there. They're out there. They're from the weekend, get their notes out there early. I mean, you got HSBC downgrading Nike now.
Oh, thank you.
Thanks. probably going to end up being right because Nike only goes down. I mean, here is the worst stock on the whole stock exchange. You get this huge rally in the S&Ps and Nike doesn't rally 2 cents. Now it's actually making a new 52-week low here.
52-week. I think
Well,
this
yeah,
is.
I know, multi-year low. I mean, this stock is awful. You think about, you just went through the Masters, and you think about like when Tiger was wearing all that Nike gear, and Tiger winning the back-to-back Masters. Those were Nike's heydays. Those days are long gone. Was they even sponsoring? Was there anybody wearing Nike gear there at the Masters? Who's wearing Nike gear there? Was there anybody?
Well, they don't make golf equipment anymore. But I
Really?
guess, yeah, they stopped making golf
I got
equipment.
my clubs are Nike clubs. I got the Nike Sasquatch. That shows how much
Man,
I golf. They're like 25 years old.
you know what? I lost my patience for golf. I just really. But let's take a look at golf after the match. If you were looking for a catalyst trade here in a Cushnet Holdings that had
Is
a
Rory
nice.
still? Well, Rory is. Rory's got some Nike gear on, so we're back.
Really?
Yeah. Rory's
Gear,
still
but
got
not
Nike gear on.
clothes.
I didn't know that. I just looked it up. Scotty Scheffler's in there.
Clothes.
Yeah, the clothes, apparel,
Yeah.
and footwear. So he's still got some Nike gear on. So Rory
Yeah.
wears some Nike. It didn't help anyways.
I just tell you, the golfers, I just have the utmost respect for them. I mean, and the people sitting in the fairway like that, or not in the fairway, but in the stands. I mean, I just don't see how people just don't get plucked like all the time. I mean, at least if I was out there, I'd be yelling for the entire time.
All right. I gotta yell for all the time. I get out golfing 5 times a year, and I'm yelling for all the time too. Four.
Yeah. Well, I'm usually in the fairway, but it's usually when I'm on the 4th hole, I'm on the 5th fairway.
Yeah, the same way. I'm on the fairway. I'm playing it from the other. They're going back and forth. I'm playing it from the other.
Fee pointed out to me that that Rory, he lives in Jupiter, Florida. He was coming. He was, I guess, for the last 2-3 weeks, he was taking his daughter to school, and then he was flying to Augusta and playing, and then flying back, and then picking up his daughter from school. So he got a little bit used to the course. So,
Wow.
But that's it for today. We made it. We made it without the Brentster. The Brentster will be back tomorrow. And
buy the dip. It's still going.
Yeah,
still
buy
buying
the
dip here.
Just buy the dip until
yesterday's
yesterday's low or unchanged. Be careful. Plus, at 10 a.m., I don't know what's gonna happen. So we'll see with that, but we'll pick up the pieces tomorrow morning on the pre-market prep, folks.